Wow, that's a lot of information. It seems like Tech Mahindra has had a pretty eventful quarter. I mean, looking at this financial report, there's so much data to unpack.
Yeah, it's definitely a comprehensive report. Let's break it down, piece by piece. Actually, they've released both their consolidated and standalone financial results. So we have a lot to look at.
Okay, so first off, can we talk about the revenue? I see the consolidated revenue is around 132,856 million rupees for the quarter, but the standalone is lower at 111,762 million rupees. What does this indicate?
Well, the difference, I guess, comes from the inclusion of subsidiaries, joint ventures, and associates in the consolidated figures. It kind of paints a more holistic picture of the company's overall financial health, which is important.
Right, that makes sense. It's like one is the main business and the other is the whole extended family. Also, what about the profit? I'm seeing a pretty big jump in profit after tax compared to the same quarter last year, like a big jump.
Indeed, the consolidated profit after tax is 9,832 million rupees, a significant leap from 5,104 million rupees last year. And on the standalone side, it's also quite strong at 8,583 million rupees compared to 5,168 million rupees. It's a good sign.
So that's like a 92.6% year-over-year growth in PAT. That's pretty impressive, right? I also noticed there's mention of a PAT margin expansion of 350 basis points. What does that mean in real terms?
Well, the PAT margin expansion shows how much more profitable the company has become relative to its revenue. It's like for every rupee they earn, they're keeping a bigger share as profit, which indicates improved efficiency,
Okay, I get that. And now it also mentions new deal wins, TCV growing by 95.4% year on year to $745 million. That sounds like a big deal. What kind of deals are they winning?
And it is a pretty big deal. They've secured deals with some major players, for example, a large telecom operator in Europe and a big German telco. They're also working with a leading high-tech and mobile company.
Wow, that's a pretty impressive client roster, actually. So it seems like they're expanding their reach across different industries, right? So it's not just one specific type of company they're working with.
Exactly. It shows their diversification and ability to adapt to different markets. And, they have these new centers of excellence focusing on AI, which probably helps them secure these deals.
Yeah, it seems like AI is a big focus for them. They launched this TechM agentX, a suite of Gen AI powered solutions. What exactly is that and what is it used for?
Well, TechM agentX is like a supercharged set of AI tools designed to automate complex tasks, for their clients. It's supposed to boost productivity by up to 70%, according to them. So it's pretty powerful.
That's insane. 70% is a huge leap. And they're using the NVIDIA platforms for these AI advancements. So they are really going all in on the AI front, like really doubling down, huh?
Absolutely. I think it's a smart move, actually. They are also collaborating with Amazon Web Services, AWS, to develop an autonomous networks operations platform, which is very important for modern businesses.
So that's like they're not just using AI internally, but they are building it for their clients too. It's a real game changer. This is pretty intense. Now, let's talk about these legal matters I saw. Something about an erstwhile Satyam. What's that all about?
Yes. This is regarding some claims made against erstwhile Satyam, which merged with Tech Mahindra back in 2011. It's a long-standing legal issue where 37 companies claim to be owed about 12,304 million rupees.
Wow, that's a lot of money. So is that affecting Tech Mahindra's current financials?
Well, the company has disclosed this amount as amounts pending investigation suspense account, net. Their management believes, based on legal opinion, that they don't have to pay these claims on final judgment. So it is separate from their equity and liabilities.
Okay, so it's like a separate thing, not really tied to their current profits. That's a relief, I guess. Now, moving on, I also see a lot of recognition they've received, like Trailblazer Supplier of the Year from Cisco. That's pretty big.
Yeah, that shows the trust their partners have in their innovations and services. They also received awards for their mobile banking app and were recognized as a best brand by ET Now. So they're doing well on multiple fronts.
That's quite an array of awards. They even got recognized in the Dow Jones Sustainability Index for the 10th consecutive year. So it is not just financial they are doing well in, it is sustainability as well, right?
Precisely. It shows their commitment to sustainability and responsible practices. It's becoming more important for companies to focus on this aspect of business. So it's good that Tech Mahindra is ahead of the curve here.
Definitely. So overall, it seems like a pretty positive quarter for them, with all the growth and recognition. But it looks like they are also facing some challenges too, I guess.
Right, there are always challenges. The report shows a slight decrease in overall revenue compared to the previous quarter, a drop of 1.3% quarter over quarter in USD terms, although it grew by 1.2% in constant currency terms.
So that means the currency fluctuations are impacting them, I guess?
Exactly. Cross currency headwinds are definitely at play here. But they've managed to maintain good EBIT and PAT margins despite that, which speaks volumes about the work they are doing.
True, they're still growing, just not as much as they could have without the headwinds. Okay, I think it would be a good time to remind our viewers to like, share, and subscribe to our channel for more in-depth analysis like this.
Absolutely. And don't forget to hit that notification bell so you don't miss any of our future episodes. It helps us a lot. Now, continuing about Tech Mahindra's financial results, another point to mention is about their headcount.
Yeah, I saw that. It says the total headcount is down by 3,785 compared to last quarter. Is that something to be concerned about? Like, is that normal?
Well, while it's a decrease from last quarter, their total headcount is up 4,238 year on year. So it's not like they're shrinking. The drop in headcount can be from natural attrition, which they're controlling fairly well.
Right. And they have an IT attrition rate of 11.2%, which is mentioned in the report. That seems reasonable in the current climate. So it's not a cause for worry, I suppose. IC utilization is around 86% too. Right?
Yes, the IT utilization rate is 86%, which is good. It means that most of their resources are being used efficiently. So all these indicators, show a balanced approach to operations.
That sounds like they are keeping things well balanced. Now, I also noticed something about days of sales outstanding, DSO, being 88 days. What does that signify for their business?
So DSO is basically the number of days it takes for the company to collect its payments after a sale. A lower DSO indicates they are collecting payments faster, which improves their cash flow, which is actually quite good.
So 88 days is pretty efficient then.
Yes, it's an improvement of 6 days compared to the previous quarter and 3 days year over year. This shows improved cash management, which is a crucial aspect of a company's financial health.
Okay, so that's a good sign too. So overall, even with some of the challenges, it seems like they're managing things pretty well and the company is heading in a positive direction.
Absolutely. I think they are strategically expanding their presence in various markets while maintaining a focus on technological innovation, especially in areas like AI and next-gen network operations.
Right. And it seems like they're focusing heavily on both IT and BPS segments, which is a clever strategy. So they are catering to multiple client requirements at the same time. That makes sense.
Exactly. The report also highlights their segment-wise revenues and assets. So we can see how both the IT and BPS divisions contribute to their overall financial results. It's good to see that both are growing.
Yeah, and the fact that they have clients across the globe shows their reach. Their revenue breakdown across geographies also tells an interesting story, I guess.
Yes, the Americas account for about 50% of their revenue. Europe is around 23%, and the rest of the world accounts for 25%. So it's clear they have a global presence with a strong base in the Americas.
Okay, that paints a really clear picture. So if we were to sum it all up, this seems like a quarter of solid growth, innovation, and strategic moves, despite some headwinds. What do you think?
I completely agree. I think despite facing some challenges, the overall outlook for Tech Mahindra seems quite positive. They're investing in the right areas and are managing their finances well.
Definitely. It's clear that they are focusing on the future with their AI initiatives and strategic partnerships. And they've also addressed the past with their disclosure of the Satyam matter and managing it effectively. So, yeah.
Exactly. I think it is quite an insightful report covering their performance, strategies, and future outlooks quite effectively. And there are a lot of things to be excited about going forward.
Yeah, I agree. So, what do you think the next quarter holds for them?
Well, I think if they continue their focus on technological advancements and client acquisition, I expect they'll continue on this upward trajectory. But it'll be interesting to see how they manage the external market challenges.
Yeah, I guess we'll have to wait and see what happens next quarter. It certainly seems like they're positioning themselves well for the future, though. This was a fun and informative breakdown. Thanks.
Absolutely. It was great discussing this with you. And I think we both learned a lot. It is always insightful looking into these reports and see the stories they tell.